Hey, welcome to another episode of the Go With John show. We just wrapped up our conversation with John Tomasello of Burke and Herbert Bank. He chatted today with us about lending, what you need to go through if you're self-employed to get a loan. John tells us a couple of great stories, one about his grandmother, and you'll also enjoy hearing about the parallels between Burke and Herbert Bank and It's a Wonderful Life. So I hope you enjoy listening as much as we enjoyed chatting with John Tomasello, Burke and Herbert Bank. So welcome to another episode of the Go With John show. And today I'm excited to say we have John Tomasello here with us from Burke and Herbert Bank. Welcome, John.
Thank you for having me.
Yeah, so really, I'm very passionate about Burke and Herbert Bank. I've been banking with them since the 90s. It's a great organization. I think they have great values, and I think that's one of the cornerstones of being successful in business is to surround yourself with people who have great values, because then I think you've got people in your corner who have your back, right?
Sure.
So,
Yes.
So it's a great organization. But so tell me a little bit about yourself and how did you end up at Burke and Herbert Bank? I guess. And please bring us through your travels through Wall Street, because we're always interested to hear about that.
Well, I got a job with Fannie Mae because I was the only person that got an A in this class in quantitative analytics in college. Mm-hmm. So this guy that was the professor worked at Fannie Mae.
Right.
So he hired me, and I thought, well, this is great. I'm going to be working for a candy company.
Yeah.
And so I literally got there, and I said, well, where's the candy? Where's the manufacturing plant? And he just looked at me with this weird look on his face, like, how'd you get an A in my class?
Right.
And I said, well, Tom, you said I'm going to be working for Fannie Mae. Where's the candy? He said, Fannie Mae is Federal National Mortgage Association. We do loans here.
Right.
So that's how I came into the business, and I worked there for a little while. And, I just slowly progressed into, all kinds of different things. Like we did the very first credit scoring model.
Right.
So this was back in the late 70s.
Okay.
And we built this thing. Now, remember, I'm fresh out of college.
Yes.
So I don't have a clue what I'm doing. I'm here to make candy.
Right.
And my job was to travel all around to the Fannie Mae offices and gather all this information about loans.
Yeah.
What makes a good one and what makes a bad one. So the rocket scientist guys, they developed the computer models. We put it all together, and we took it to Congress.
Yeah.
We said, hey, we got this great thing, 100 points. You get 50 points, you get the loan. You get less than 50 points, you don't get the loan.
Right.
And the congressman said, we're not doing this. Get out of here.
Right.
And so we were gone. So we did that. I got to be part of the team that developed the very first mortgage-backed security with Solomon Brothers and Lou Ranieri up there on Wall Street.
Right.
And that was my first taste of Wall Street. So, but lo and behold, I went into retail, and then I got into secondary marketing. And my venture into Wall Street was because back in the mid-'80s, there were these things called CMOs, collateralized mortgage obligations.
Right.
You basically just take $1 bazillion worth of loans.
Yeah.
You bundle them up, and
Right.
then you strip them off. And so you might buy them at par, but then you might sell them to a casualty company, a bank, and then an insurance company. And each of them, because they want a certain segment of this security, they pay you more.
Right.
So they pay you 102 or 103.
Right.
So I just keep the difference.
Right.
So that was my foray into Wall Street.
Okay.
And that's how I got into, the real end of mortgage banking. But the spreads became very narrow. A couple of years later, I just said, I was flying up there every single day and flying back every single day.
Wow.
Out of Newark Airport to the Gaithersburg Municipal Airport.
Wow.
So
That's a tough life.
it was.
How long did you do that?
2 years.
Okay.
And money was great. Can't complain about that. But I had a family to raise, and
Yeah.
like I said, the spreads got very thin.
Yeah.
At one point, you're only making maybe 10 basis points.
Right.
So to me, it just wasn't worth it.
Yeah.
So I come back to Maryland. I go into retail. I spend a couple years in retail, and that led me to actually, develop a bigger mortgage company for a big builder. Mm-hmm. So we took this local builder, who ended up selling out to a huge conglomerate builder.
Right.
And we took that from virtually nothing up to where they were doing $1 billion a year.
Wow.
So I actually did that for 24 years.
Yeah.
And then I retired.
Yes.
So now I'm playing golf every day, playing with my grandkids. I'm loving life.
Yes.
I don't have a care in the world.
Yeah.
And I get this call from this guy at Burke and Herbert Bank.
Right.
And they basically say, hey, here's the job. You know, we're doing a couple loans a month. We're not really doing a lot. How'd you like to come on and expand it? Really need to get into LMI lending.
Right.
I don't know if you're familiar with that. But
What is LMI lending? Tell us.
That's low and moderate income.
Okay.
So Burke and Herbert, we just weren't doing enough.
Yeah.
So we really are pushing, and we're still pushing that, to do low and moderate income loans to people that really need them, that, you know, struggling to bring up the cash that they need. So we've been expanding that, but it literally took 4 guys and Mr. Burke to actually get me to take this job, because I was very happy just doing nothing all day long.
Right.
So I drive from Maryland. I leave the house around 4 o'clock in the morning,
Yeah.
so that I can beat the 2-hour traffic to Alexandria.
Yes.
And then I try and leave at 2 or 3, but lately I get there at 6 and I don't leave till 6 or 7 anymore.
Right. You're back to work.
I am.
Yeah.
So that's how I kind of came to Burke and Herbert. But
Yeah.
the thing that really impressed me about the bank is, before I actually accepted it, I would go to the branches and I would visit.
Right.
And you walk in there and everybody greets you at the door.
Right.
It's not like some of these big behemoth banks where nobody knows your name. This is a place like It's a Wonderful Life.
Right.
Everybody knows your name at Burke and Herbert
You're
Bank.
absolutely correct.
And
You're
that's-
absolutely correct.
And our our motto, our tagline is "At your service."
Right.
So, we're a community bank. We're about 3.3 billion, I think, now.
Yeah.
And everything that we do is based on the service to the customer.
Right.
How can we help you, and how can we make it easier? What can we fix?
Yep.
So if you have an issue, they don't just push it off to another department. Let me try and figure it out for you, or let me walk you over to somebody who can.
Yeah, and you are absolutely correct, and I love that about the bank. I spend a lot of time in and out of the Vienna branch, and the folks there, every time I walk in, they know my name, and there's very little turnover. In your bank in general, there's very little turnover. There are not too many businesses out there that I utilize their services where there's so little turnover as there is at Burke and Herbert. So it's nice.
Do you still bank at the Vienna branch?
Yeah, I do.
Because
Yeah.
they're building a new one.
Yes. But it's still going to be the same.
It will be the same people,
Yes.
be the same friendly people. You get the same service, the great service, but
Yeah.
they kind of outgrew that little teeny branch.
Parking's tough there.
Yeah.
You got to fight for the 1 or 2 spots that are out front. So.
Yeah, I park over at the shopping center next door so that I don't take up a space every now and then.
Yeah. Good.
And we're opening a branch in Fredericksburg.
Nice.
Actually, maybe even 2. I'm not involved in the branch system itself, but I do go out to a lot of the branches.
Yep.
And we're trying to expand that footprint. We did close one of the branches in Old Town because it was right down the street from the other one.
Right.
But,
Makes sense.
I was walking, my very first day on the job, I was walking with my boss, Joe Bonacorsi, who runs the home equity line department.
Right.
And we were walking up King Street, and I said, look at this office right here. There's bars on the window, and it's right here on Main Street. Who works there? And he goes, well, that's Mr. Burke's office. Like, what? And I said, is he ever there? He goes, there right now. So I'd only talked to him. I'd never met him.
Right.
So he actually has a office right on King Street, and he's not there all the time.
Sure.
But he's out in the community all the time. He
Right.
walks up and down the street. He shakes hands.
Yep.
And he still is a good ambassador for the business that comes in.
Right.
Commercial loans, residential loans, he does it all.
Yeah, fantastic.
He's I don't know if he's 4th, 5th, or 6th generation, but there's always been a Taylor or a Burke at the company.
Amazing.
And you asked me about the parallels, and
Yes.
so I'm going to tell you that the stories you've seen the movie It's a Wonderful Life.
Yes.
Where you walk in and what's the guy's name, Rasmus, or I forget the old guy's name, the uncle or whatever his name is. So Jimmy Stewart walks in.
Yeah.
Where's the money? Where's the money? And the guy's got a parrot on his shoulder.
The banker.
The banker.
Yes.
And that was one of the Burkes. I think it was Taylor Burke
Right.
actually used to run the bank and had this parrot, I'm told, on his shoulder, and people would come in to talk to him and the parrot.
That's amazing.
And I just couldn't believe what I was hearing. But
yes.
That's a true story. And, you know, if you're in the boardroom, you see all the different Burke's pictures up on the wall along with all the other.
Yeah.
But that was an interesting thing to me.
Yeah.
Especially that Mr. Burke would just walk up and down. I constantly am, you know, I'll go get a cup of coffee and I'll see him just walking up and down the street.
Yeah. Yeah. It's great. I mean, it's that's what a community bank should be.
Yeah.
You know, absolutely. You know, low turnover, and the principals, the managers, the branch managers are part of the community, and that's what it is at Burke and Herbert, and it's nice.
Well, here's another thing too. If I can put in a plug for the bank.
Absolutely.
When we let's say we make a loan and it doesn't quite fit the cookie cutter mold.
Right.
So we don't have to send it to a big committee, wait 2 or 3 weeks. I go to Joe and Jeff and I say, hey guys, here's this loan.
Yeah.
Let's take a look at the merits. Do we want to do this loan or not? And within 10, 15 minutes, we've made a decision.
Right.
So whereas most places you got to wait, 45 days for somebody, some bigwig to make a decision and sign off on it.
Yeah, it's cool.
And that's what goes on at Burke and Herbert.
Yeah.
We have that ability to make that decision pretty quickly.
Yeah. And I think technically you're the oldest bank in Virginia. Is that correct?
We were founded in 1852.
Okay.
In fact, when I had to get a couple licenses, I said, where's our charter? And they handed me this piece of paper that literally looked like the Declaration of Independence.
Wow.
It looked that old. It was, it was crusted on the sides, and it had somebody's signature on it. And I want to say it was December. I don't know, but it was dated 1852.
Is that on display somewhere? That should be.
I have it in my computer.
Yeah.
But I don't think it's actually on display anywhere. But yeah, 1852.
Right.
There are lots of, like, I don't want to name any names because a lot of these people nowadays wouldn't be politically correct to tell you who was on our board and stuff.
Sure.
Back in the 1800s. But lots of generals and congressmen and senators are bankers with us.
Yeah.
But we really want to reach out to the entire community all across the spectrum.
Right.
Doing our fair lending and making sure that we're serving the entire community.
Yeah.
And not just, the congressmen and senators and things like that.
Right. Fantastic. Well, I think you guys do a great job at it. So
thank you.
Good deal.
Yeah.
All right. Well, we're going to take a quick break, and when we come back, you've got you're going to tell me about your grandmother.
Oh, okay. I will.
Yes. All right. We'll be right back.
Okay.
I'm John Jorgensen, and if you want to learn more about buying a home or selling your existing home, contact us through the show. We work with an incredible network of professionals who can help you get through the process smoothly. Again, that's gowithjohn.com. So, John, you've got a story or two you can share with us about your grandmother.
My grandmother. Yeah, my grandmother was first generation Italian.
Okay.
They came over on the boat. I think it was the Mauritania with my then grandfather.
Okay.
Now this will give you a little insight. My grandfather was 45 at the time, and she was 17.
Wow.
Yeah, a little robbing the cradle there.
Yeah.
But so anyway, they met on the boat. They came over, and the rumor has it that he was in the Cosa Nostra, which is modern day mafia, I guess.
Yeah.
And so they had to change the name. So technically, my name is Tomasello with an I.
Yeah.
But they knew that Tomasello was Cosa Nostra from Sicily.
Right.
So they changed it from an I to an O when they came over. And so that's how they actually got into the country, because they weren't letting Tomasello in.
Wow.
So anyway, years and years later, I was having this conversation with my grandmother, and I was like, I never knew my grandfather. Dad said that he died of pneumonia.
Yeah.
And she starts laughing.
Yeah.
And she goes, pneumonia? And then she says, if your grandfather has died of a pneumonia, it's only because of all of the bullet holes are to his chest. So she knew.
Yeah.
Yeah. And that was my first, even getting a haircut.
Wow.
Over in Wheaton, Maryland, you see all these guys coming in black trench coats and fedora hats, and you wondered, what are they doing in a barber shop?
Right.
So it's an interesting parallel.
Yeah.
And my
So what year was that? What year was your grandfather killed?
Oh, I have no idea.
Okay.
I never knew him.
Okay.
So it had to be, I guess before the 50s.
Yeah.
I don't really know. I never met him, never knew him.
Right.
Nothing. And then, of course, all my father's brothers were killed also. So,
Wow.
yeah, and my
Wow. That's
my
that's
mother's
something
maid.
there.
Oh, it's a fascinating story. But my mother's maid of honor was one of the Bonanno daughters.
Wow.
So yeah, and he was of course the capo di tutti of
Yeah.
it. So it's just but I never knew any of that end of it. I was always around it, but never.
So yeah, so you skirted out. Yeah, so you went to college and you got on your own path away from the family business.
I did. Yeah, I was into baseball and golf, and now my passion is golf, of course. But
Right.
the grandkids take up a lot of time too.
Yeah. So how often do you golf?
Well, used to be every day.
Right.
I got it down to about a 2.
Yeah.
But now I'm more like an 8, and
Right.
I play once a week.
Okay.
In the weekends with my brothers.
Okay. What do you love about golf? What is it you love about the game?
It's the serenity, but the competition.
Right.
You're always fighting against yourself, but then you're playing against your friends. And the other thing is you can play with anybody.
Yeah.
Anybody, even if they shoot 120.
Yeah.
You just give them strokes, and
Yeah.
you go out there, and and it's a close match, even though they may shoot 120 and you shoot 78.
Right.
So
Right.
but it's the serenity. It's getting away from the hectic. Because mortgage banking, everything's a crisis.
Yeah.
Everybody wants to get in their home, or they have to close.
Yeah.
And especially when rates are going up, and
Yeah.
or nowadays, as everything's being written non-contingent,
Right.
even if you have to get a loan. So
Yeah.
there's nothing, you can't screw it up.
Right. Exactly. So how do you cope with the stress?
That I'm a fairly laid back person.
I see that.
And
Yeah.
pretty calm. So my demeanor, as I get older too, I get more calm.
Yeah.
And I just take deep breaths, and sometimes I'll just walk away from it.
Right.
I just got to get away from it.
Right.
And you got loan officers that are screaming at you, I need this deal done, I need that deal done, and then your processor's saying, well, I don't have this document or that document.
Right.
And then you got the underwriter saying, well, I don't even like the loan.
Yeah.
So you have to be the diplomat.
Yeah. You're stuck in the middle.
Yeah, and you don't want to tick anybody off.
Sure.
So
sure,
you just
sure.
try and be nice, even though you want to scream at them.
Yeah.
But you just take it all in, and you try and find a happy compromise.
Yeah. So how many people do you work with that are getting pre-qualified before they go out and find a house? Or is it usually they find a house and then they're calling you for the loan?
No, virtually everyone gets pre-qualified.
That's really good. I'm glad to hear that.
Yeah.
And I highly recommend that for anyone listening. That I run into quite a few people who get deep into the process before they decide to get their financing in line, and then it turns out they can't do what they thought they could do.
Right.
Or it turns out they can do a lot more than they thought they could do.
We can, it's funny, we can usually get them more than they think they can get, or more than they wanted.
Exactly.
Every now and then it's the other way around. But the biggest problem is, you'll pull their credit, and there'll be something on there that they didn't know was on there that might mess it up.
You know what? And that's a really valuable piece of information. And I've heard that from so many lenders.
Yeah.
Over the last 20 years that I've been in the real estate industry. It's the lenders say all the time that people get surprised by what's on their credit report. So really, if you're thinking about buying a house and you want to get out there and have a transaction, the first thing you should do is engage with a lender and get your credit pulled and find out what's going on. A lot of people will say, I hear from the lenders, because I'm not in the lending side of real estate, but I hear people will tell lenders, I want to get pre-qualified, but I don't want you to pull my credit. Do you hear that a lot?
Not a lot, but
you do get that?
That they're not serious.
Okay.
Now, a lot of them they'll shop around.
Yeah.
So they may have 1 or 2 or 3 lenders, but what they don't realize is that if I'm pulling your credit, if 3 different lenders are pulling your credit, your scores might go down 2 or 3 points.
Right.
But if I pull your credit 15 times within 30 days, it's not going to go down.
Right.
So they are shopping around, and that's why they think, well, if you pull my credit, my score is going to drop 10 or 15 points.
Right.
That's not really true.
Yeah.
But this myth also is out there that I have to have a 700 credit score to get a loan.
Right.
And you don't.
Yeah.
FHA doesn't really even have a minimum credit score, but the investors that buy them, they do.
Yeah.
And they fluctuate now. It used to be, 580 to 620, but a lot of our investors are saying, hey, we want 640 or 660 now.
Right.
And so it's, a lot of customers are saying, wow, I heard I can't get a loan without a 660, but there's still plenty of lenders out there will go down to 620.
Yeah.
But there's also this this myth that you have to have $50,000 or $60,000, and that's not true either.
Right. So what do you have to have? So what do you tell? So is there an average Joe for you? Is there a what is kind of the average consumer that lands on your desk looking for a loan, and what advice would you give them? What is your So you may not have an average Joe. I'm not assuming. I'm just wondering do you have like a bulk of your customers that fall into the same kind of bucket from a net worth perspective?
Not really. This Alexandria McLean is a haven for high net worth people, obviously. But across the board, 660 is like your average credit score.
Okay.
But you can't really put an equity on it right now because there's so many people. Prices have gone up so much that everybody seems to have 20 or 30 or 40% equity.
Right.
But for the person actually buying a home, typically 10% down.
Yeah.
But we want people to know that you can still buy a home with 3% down payment.
Right.
FHA requires 3.5%, but Fannie Mae and Freddie Mac have these home ready programs where it's only 3%.
Yeah.
We at Burke and Herbert, we have grants that we can give people too. So if their income is below the median family, 80% below, we can give them a $7,500 grant.
Wow.
And they don't have to pay this back. They can use it towards down payment or closing.
Wow.
And then, as you know, if you can convince the seller to pay some of the closing costs, you can get in with very little cash down.
Right.
But it's got to be the right opportunity. And right now, with everybody bidding up and jacking up the prices,
right,
it's hard to get the sellers to do anything.
Right. Now, where do you write mortgages? Do you write mortgages in all markets in Virginia, or are you just in the markets where you have branches?
We actually do loans in Florida, all up and down the East Coast.
Okay.
I just did one in Montana. Because we're a national bank.
Right.
Well, even though we're just local.
Yeah.
But most, 90% of what I do is here in Virginia and Maryland and D.C.
Gotcha.
And we're starting to do a lot more with the low and moderate income families.
Right.
And I just want people to know that, that's available to you.
Right.
But, because it's so expensive to live here, we also have phenomenal jumbo pricing too. So we just came out with a 3% jumbo loan up to $3 million.
Right.
And there's no points on that. So your APR is only like 3.03.
Right.
So it's a great product as well. But then we just have all the other basic stuff as well.
Yep.
So,
fantastic.
Yeah. But you're absolutely 100% right. Go in and get pre-qualified first. Get that pre-qualification letter.
Yep.
I know most people don't put a whole lot of stock in it.
Yeah.
But at least you'll know, what you can afford, what you can get,
or what you want to spend.
Yeah.
It really is so important. It's so important. And then get your credit pulled to make sure there's not a surprise there.
Yeah, because you've got to get it fixed quickly.
Yeah.
And there are companies out there that will help you fix it. And then the other thing we can do is if somebody has a lower credit score, maybe they're in the 560, 580, we have a computer model that we can pull, and it will tell us what to do to get your score up. So
nice.
The first thing people like to do is they want to pay off their debts.
Yeah.
Well, that's not always a good thing.
Yes.
Because if I have a car loan, let's say, and it only has $2,500 left, but I pay it off, well, now it's not on my credit report, so it's not increasing my scores.
Oh, gotcha.
So we tell them, no, if you can qualify, just leave it on there.
Yeah. That brings up a thing, because I do a lot of land transactions
with
the new home construction that we do. And I meet people all the time that have cash. Let's say they have $300,000 in cash. They go to a lender, they get pre-qualified, then they find a piece of land they want, and the land is $300,000. So now they use their $300,000 to buy the land, and they don't involve the lender. Well, now they don't qualify for the loan anymore because they've spent their cash. And so you can accidentally do things that you think are going to be helpful to your situation that actually hurt your situation. So it's good advice.
Yeah,
good
very
advice.
much so.
Good advice. All right, fantastic. So we're chatting with John Tomasello. We are going to take another quick break, and we're going to come back for our final segment. Thanks for all that information, John.
Okay.
A lot of folks think that building a custom home is a complicated and arduous process. It doesn't have to be. At Stanley Martin Custom Homes, we have the process down to a science. We will bring you through the buying, design, and building phase one step at a time. Head on over to webuildonyourlot.com and check us out. Reach out to us if you want to get started on the path to your very own Stanley Martin custom home. So we are back with John Tomasello. So far, I've gotten your name right every time. That's amazing.
Yeah, that's a victory in and of itself. Even my mother can't pronounce it right. So.
I don't believe that. Well, she probably still says Tomaselli, huh? She probably does.
I don't even think she knows who I am anymore.
That's awful. So all right, let's talk about, so thanks again for coming in. I'm really enjoying hearing about your programs and learning a little more about you. And I'm very passionate, like I said, about the Burke and Herbert institution. It's amazing.
Mm-hmm.
It
really is.
It is so hard. I mean, if you just stop for a second and think about it, it is really hard to get a business going. It is even harder to keep a business going. It gets, as time goes on, it gets more complicated and more difficult, and you're growing, you have growing pains. But to have a company that's been around for a couple hundred years is just mind-boggling to me, and it's I haven't been down to Old Town Alexandria in a long time. I used to go there all the time. In fact, I used to live on Duke Street in the 80s.
Oh, wow.
And, I remember the old one-arm banded adding machine on the counter at Burke and Herbert where you could go in and add up your deposit and print out the ticket, and you would take your paper ticket up to the counter with your deposit slip. And it was just a really cool experience for me, and it's still today sticks with me.
Yeah. Well, and they didn't even have a computer in the company until I want to say in the 90s.
Right.
When everybody else was doing them in the 80s. It may have even been later than that.
Yeah.
So even in the 90s, you would walk in with the old passbook.
Yeah.
And they would fill out the passbook for you.
Yeah.
And one of the older Burkes said, I want everyone to know their name.
Right.
And so we have such a loyal clientele. A lot of people just call and say, I'm not shopping around. Burke and Herbert is my bank.
Right.
Burke and Herbert Bank is my bank. And my father was here, my grandfather was here, and I will be a member here. Yeah. And it's just amazing to me how many people feel that way.
Yeah, it is. It really is.
Well,
they've earned it.
Yeah.
And you earn it one client at a time, and it takes years and years and years.
Mm-hmm.
It takes years and years and years to develop that bond with the customer. So I'm glad you're here.
But even our commercial clients, I mean, they're not just numbers to the commercial guys and to us in the mortgage department. So
Right.
if somebody's missed a payment, we give them a call. We don't just send them a notice.
Right.
We call them up, say,
That's
is there
nice.
any problem? Can we help in any way?
Yeah, that's the way it should be.
That's what we do.
Yeah, nice. So let's talk about a little bit about lending again.
Okay.
And so when you're self-employed, I think that's a whole thing, getting a mortgage. So what do you put people through when you're self-employed? So for all the folks out there listening that are business owners, if you want to get a mortgage, it's totally different than if you get a W-2, right, and you're working for another company.
Without a doubt, especially if you got a loan back in 04, 05, or 06.
Yeah.
And this is common. Everyone tells me this. Well, I didn't have to give you all this stuff back then.
Right.
Well, that was then, and this
Right.
is now. It's like interest rates. If you call me and say, I got a quote yesterday, that's no good anymore because I get rates 3 or 4 times a day now.
Yeah.
So, and it's the same thing. So when you ask about the self-employed people, yeah, and in a manner of speaking, we put you through hell.
Yeah.
And it's mostly because of COVID right now. So if you're a self-employed person, typically you would have to give 2 years of tax returns.
Right.
If you own more than 25% of the company, then you need to give the business tax returns.
Right.
And they always seem to forget to give us the K-1s because the K-1s, even though the company may have made money, you may not have profited from that K-1. So the K-1 tells us how much you got.
Yeah.
But the biggest thing with COVID is now you have to sign an attestation form, which is something no one had ever done until COVID. So now the form says, my business hasn't suffered any setbacks because of COVID. Mm-hmm. We're still doing the same amount of business, or we're not.
Right.
Or this is how we're impacted, and this is how we're going to get through it.
Yeah.
You cannot use the COVID income or the income from the government as income, but yet you have to count the debt. So you get screwed there.
Right.
But then the biggest thing for the self-employed person is now you need a profit and loss statement. Now, the profit and loss statement is a double-edged sword. If the profit and loss statement shows us that you made more money than you did on your tax returns last year, well, then we use the tax returns from last year, which, okay, but I made more. But we don't know that. This is just your handwritten P&L.
Right.
However, if the P&L shows less income, then we use the P&L.
That's not fair.
It's screwy. It's wacky. So if your income is increasing, then we average your income. But if your income is decreasing more than, say, 15 or 20%, then we use the lower income.
Wow.
So when we get your tax returns, what we're looking at is how much revenue did you bring in?
Yeah.
So let's say you have a medium-sized company and you brought in, $3,600,000 last year in revenue.
Right.
We want to look at that bank statement and make sure that you were bringing in about $300,000 a month in revenue.
Right.
Because that's what you put on your P&L.
Right.
And so, if those bank statements don't show that, then we put you to the third degree. Well,
right.
Now, a lot of businesses are cyclical.
Yeah.
So we get that. So we try and go back a little bit further. But at the very least, because they've extended the tax deadline now, a lot of people haven't filed tax returns.
Yeah.
So now I need 2020 tax returns, and I need the first quarter P&L for 2021.
Right. I just went through that with a refi, and I started my refi in January, and they asked for a P&L for 21, and I said, 21. Are you serious? I go, it's 2 weeks old, 2021. And but it took so long to get the refi done. I finally ended up having to produce a P&L for this year. Then it got to be February, March before the loan closed. But yeah, it was very, very frustrating experience for me. It was not a lot of fun. So yeah, I can imagine you must have a lot of self-employed folks that are really frustrated with you and your phone calls.
Well, I get involved personally in a lot of them. So, because I want to make sure if the loan officer doesn't see something, and we have computer models we run them to as well, but a lot of self-employed people write off a lot.
Yeah.
So I got this one customer who was in a construction business, and I looked at the tax returns and I said, "There's nothing here. What am I going to use here?" She writes off everything.
Right.
And the customer was like, "Well," and she was looking for a big loan, like $3 or $4 million.
Yeah.
And the comment was, "Well, how could I survive if I didn't make the kind of money I'm telling you?"
Right.
It's like, I understand that. I believe that you do.
Right.
But I can't prove it.
Right.
So I couldn't do the loan.
Yeah.
There's just nothing on the tax return. She just wrote everything off that she could possibly write off so that she didn't have to pay any taxes.
Right.
So that happens.
Yeah.
And a lot of people, you get these people that start their own business. Well, we have to show that you've been in business for 2 full years. So you filed 2 full years of tax returns.
Right.
Now that's where Burke and Herbert Bank really is different than other banks. If we look at a situation and we have a commercial relationship, we're all about the relationship.
Right.
So if we know your business and we know what's going on, we can look at that and say, okay, maybe they haven't quite been, this long.
Right.
But we're very comfortable that they're bringing in the revenue they say.
Yeah.
So you wouldn't get that at a big bank that has a cookie cutter model.
Right. Right.
So that's what we do.
Yeah. Very, very cool.
Yeah.
Very cool. And then just to talk a little bit about the W-2 folks, then so the qualification process for them is a lot easier, right? You just need a.
It is. To some extent, we all use these computer models that Fannie Mae and Freddie Mac have,
right?
And FHA, and we run them through the computers. And if the computer says yes, then we're pretty good. If it says refer.
Yeah.
Then we kind of have to look at it. If it says caution, then it's probably not going to work unless we can figure out why.
Yeah.
But the biggest thing that people should know is that it isn't so much about the net income that you bring in.
Yeah.
VA still does that.
Yeah.
VA takes your net income and they take out all your bills and your mortgage, and if you have like $400, $500, $600 left over, you can get the loan.
Yeah.
But FHA and conventional, they have 2 ratios. One is the payment to the debt, and the other, the more important one, the back ratio, is your income divided into your total monthly debts. And we really want that to be around 45%. So if your income is $10,000 a month, we want your mortgage plus your car loan, credit cards, student loans, everything to be under $4,500.
Right.
That's not a rule. Technically, Fannie Mae and Freddie Mac will approve a loan up to 50%, and FHA will go all the way up to 57%.
Yeah.
But we want you to be more comfortable than that, so we kind of look for that guideline. And a lot of the investors are saying, no, we're not going to go up to 57, even though FHA allows us to.
Right.
So
Right.
that's
Makes
the
sense.
biggest thing.
Yeah. Makes sense. Makes sense.
Yeah. The other I don't know if it's an oxymoron or what you would call it, but you want to be totally open with the lender, because we will find out.
Sure.
We almost always do.
Right.
We have these things like LexisNexis, which is a system. It's kind of like the FBI in computers that we
Right.
can access. So we can find out all kinds of stuff about you that you never disclosed to us.
Right.
And the biggest one that I find interesting is how many times somebody will give me a tax return. They don't realize that we're going to pull their taxes from the IRS anyway,
Right.
and it'll be different.
Right.
That just boggles my mind that someone would give me a tax return thinking I'm not, or they will have a side business that's either making money or losing money, but they forget to tell me.
Right.
And so, or they'll have real estate that they didn't tell us about, that, maybe they're losing money or they're making money on that. You got to give all the information you possibly can. So that's and verifying the cash, you can't just show up with cash on a mortgage loan.
Right.
Got to verify.
Right. Yeah, it goes back to what I said earlier at the beginning of this segment. You start with your situation. If you have cash, don't spend it.
And don't buy anything.
Exactly. Don't go out and get that car. Don't go out and pay cash for land if you want to build a house. Don't do anything without working with your lender.
Don't change jobs.
Exactly.
Because we now verify your employment sometimes the day of closing.
Yeah.
Usually it's 3 or 4 days before that.
Yeah.
And also we check your credit a couple days before closing too, to make
Yeah.
sure that you haven't got any additional credit.
Right. Now that opens up the door to a whole new conversation in real estate law, which are surrounding the financing contingency on a contract, right? So you got to work with your real estate professional on keeping that financing contingency in place. Because your loan isn't really approved until literally sometimes hours before settlement.
And it says on the commitment that if anything changes, we have the right to look at it and rescind our approval.
Exactly.
So
That's all good advice.
Yeah,
that's all good advice. So, John, to tack a little bit. So I asked you during the last break, and I don't know if you have anything or not, and if you don't, Nick, just edit this little piece out here. But did you come up with anything that you maybe can share with folks, some advice or some lessons learned from the road, or
the one piece that I just said is give the lender all the information you possibly can.
Right.
Work with somebody that, if you don't like somebody, first of all, you're never going to trust them. Work with somebody that you like and that you trust.
Right.
And make sure that that lender is using all the information, and he's giving you a pre-qualification letter that you can depend on. Because, as you know, when you go to put in that offer, what is it, like 20-some% of deals are paying cash,
right,
and 40% are going non-contingent.
Right.
So if you at least have that pre-qualification letter, that seller might be a little more willing to look at your offer as opposed to someone else's.
Right. Good advice.
Yeah.
Good advice. So what about personal lessons learned? From a business perspective, like getting ahead in business, getting.
Well, here's the story I like to tell everybody.
Okay.
That it's all about compromise. I've been married almost 45 years.
Yep.
To the most wonderful woman in the world, and in 45, we dated for 3 years before that.
Okay.
We have never ever, in 47, 48 years, had an argument.
Wow.
Ever about anything.
Wow.
And it's because you have to compromise.
Right.
And whether it's your lender or your realtor or the buyer and seller or whoever you're working with,
right,
just compromise. Nothing's really that awful, is it?
Right.
So just learn to compromise.
Yeah. That's good advice. Yeah, that's really good advice. That's amazing. So congratulations on your amazing marriage. You look good for it. You look healthy and you look happy, and so it's all got to be the woman you marry.
Well, I hope she listens to this.
All right, that's fantastic. John Tomasello, thank you so much for coming in today. Really enjoyed the stories and your experiences with the lending world that we live in today. Thanks for coming in.
Thanks for having me. It's been a blast.
Excellent. Thanks, John. Hey, John, thanks for coming in. I hope you all enjoyed this episode, and go out there and build something extraordinary.